Every finance YouTuber knows that anything with Warren Buffett, VOO, or fear-mongering will do well. Combine all three, and it's a gold mine. Here's why they're all overrated and why you shouldn't fall for any of these tricks. But first, let's briefly address the task at hand. Multiple videos about Warren Buffett selling all his VOO and SPY shares have hundreds of thousands of views in just a week or two. It's all a game, and I'm not going to take you through 10 minutes of rambling to show you why. Collectively, VOO and SPY made up 0.0% of Berkshire Hathaway's equity portfolio as of September 30th. So this is a complete non-event. Also, there are two other investment managers besides Warren Buffett at Berkshire Hathaway, and they are thought to manage more of the smaller positions in the portfolio. So there's actually a good chance that Warren Buffett didn't even own VOO or SPY in the first place. This is a no-fluff channel, and there's not much more to say on this topic than that. So with the rest of this video, what I'm offering you is an investment of a few more minutes of your time now that will pay off with savings of significantly more time not wasted down the road. Here's why Warren Buffett, VOO, and fear-mongering are all overrated, and you should ignore almost every video with any of that clickbaity BS in it going forward. Let's start with Warren Buffett. Don't get me wrong, I love Warren Buffett, and I think his wisdom is often very valuable and definitely worth listening to. But you know he's not the greatest investor of all time, right? That would arguably be James Simons, who you've probably never heard of, who founded Renaissance Technologies, a hedge fund that you've also probably never heard of, which returned an annualized 66% before fees and 39% after their very lofty and well-deserved fees for 30 years. This is not to say that Warren Buffett isn't also an incredible investor and he isn't worth listening to, but his objectives are also not your objectives, and hanging on to his every move is usually not a good use of your time. The much bigger and less talked about move Buffett made in 2024 was to massively reduce his position on Apple from 915 million shares at the end of September 2023 to only 300 million shares as of the end of 2024. Does that mean he hates Apple and thinks it's a terrible investment and the stock market's going to crash? No, he still owns 300 million shares of it, and it's his top holding, 28% of his portfolio. My favorite, highest conviction investment is not 28% in my portfolio. Actually, if you dive into it, what he said was that he was selling Apple for tax reasons. So does that really inform what you should be doing with your portfolio? Probably not. A lot has also been made about his supposed recommendation to buy an S&P 500 ETF, but what he really said is that most people shouldn't be buying individual stocks and thus would be better off in an S&P 500 ETF. He did not say that everyone should put everything in the S&P and never diversify or consider their own objectives. That is insane. And also, let's think about this for a second. He is an active manager, and I don't think he'd say Berkshire Hathaway has no chance of beating the S&P. So is he really saying that no active manager can beat the S&P? Not exactly. He also owns cash and Japanese trading companies, buys preferred stocks, and largely avoids the largest, hottest stocks that have been driving the S&P. So I think the idea that you should put all your money in an S&P 500 ETF, no matter what, because Buffett said so, is honestly just an egregious twist of the facts on many different levels. And that brings us to VOO, which Warren Buffett would probably agree, since he runs Berkshire Hathaway, is actually not the greatest investment of all time. I know, it's crazy to say that, right? Is it better than a random person with no investment background trying to pick stocks in their spare time? Yeah, almost certainly it is. But its cult-like following is a product, in my opinion, of two different things. One, U.S. stocks have been on an incredible run for the last decade, led recently by a couple of the largest companies, which happen to be how the S&P 500 invests. It's a U.S. market cap weighted index, so it invests in the most in the largest U.S. companies, basically exactly what has been in favor. So yeah, trailing results look really good right now. Number two, most investment influencers out there have no background on investing, and it's just much easier for them to talk about what's simplest and what they actually are familiar with. But here are two examples to the contrary. First, 4 out of the 5 American funds, U.S.-focused stock funds, have beaten the S&P 500 pretty consistently over their lifetimes, some by a pretty significant margin. The other one, American Mutual, has had similar results to the S&P 500 with way lower volatility and downside risk. Then, you've got Vanguard Prime Cap, which has absolutely dominated VOO for 40 years, leading it 97% of the time in all rolling 10-year periods by a cumulative 8,000% in its lifetime. We did a video highlighting it here. So, would VOO be a solid component of your portfolio? Yes, absolutely. But is it so great that you need to watch every video with it in its title, or invest all your money in it, or completely discount the possibility that anything else could ever be better than VOO? I would say no. And that brings us to fear mongering. Obviously, no one likes fear mongering, but yet we're still so drawn to it. So, why is that? And is there any way to overcome it? Well, it's easier said than done, and I'm not going to claim to have a magic bullet here, but this one is mental, and investor psychology is my specialty, so maybe I can help. Psychologically, we hate losing twice as much as we like winning. Money is highly emotional, and investing is highly uncertain. The most successful influencers have gotten really good at playing on these emotions. The newer investor in our Discord the other day said it was a hard time to get started investing because there was so much going on in the world. And I said, yeah, that's basically how it always is. Of course, sometimes there actually are more important things happening than others, but the media will never tell you that. You'll never turn on CNBC and hear them say, well, everything is pretty calm today. No reason to watch our channel anymore. You should probably just stick to your long term goals and see what's new on Netflix. No, they will always make everything seem like a big deal. So, knowing that going in is a good start. Then, I think taking the time to build a plan tailored to your goals can go a long way in helping you stick to it. It's the uncertainty and fear that get us to click and make us worry. But knowing that market fluctuations are normal and your plan is set up with the appropriate risk level to achieve your goals, even with the inevitable and unpredictable market swings that will likely come, will help you mentally worry less about them when they do. This video is designed to help you do that. If you ask me, it's probably one of the 5 most valuable videos we've ever created. And if you really want to learn more about the tricks that the media uses and how to avoid them, I'd suggest checking this video out. But if you do, let me just preface this by saying that this is one of our very first videos we ever made. We probably had like 10 subscribers, and we have gotten a lot better at a lot of things since then. We also don't directly call people out anymore like we did with this guy, so I'd hesitate to even share this, but the video does do a really good job of going through a lot of the tricks influencers use to bait you in and how you can avoid them. If you made it this far, please let us know by leaving a like, and I hope you'll find that the time you've invested in this video will pay off handsomely with time saved by avoiding future videos that you'll recognize are really nothing more than substance-free clickbait. Ultimately, we're here to help you become better investors. So, whether it's perspective on the markets, investor education, fund reviews, or anything in between, leave us a comment with what you'd like us to cover next and subscribe so you won't miss it. It's no fluff, no BS, just real insights from a real investment professional and chartered financial analyst designed to help make you a better investor. And if you'd like to connect directly with my partner, Kyle, and I, you can do so by joining our Discord through the link in the description.